Welcome to the Q2 FY 2026 earnings breakdown for Siemens Energy India Limited. Let's unpack the numbers driving this quarter's performance. The company posted a total income of 2,440 crore rupees this quarter. This represents a robust 28.8% jump year-on-year and a solid 24.5% climb from the previous quarter. Driven heavily by their power transmission segment, the strong demand momentum continues to fuel this impressive top-line growth. Total expenses for the quarter stood at 1,937.8 crore rupees. Project and direct costs took the largest share at 1,047.5 crore rupees, while employee costs were kept strictly in check at 259.7 crore rupees. Despite the significantly higher operational activities, management's disciplined execution kept overall costs incredibly well managed. Operating performance was stellar, with EBITDA clocking in at roughly 498.3 crore rupees. This translates to a highly impressive operating margin of 20.8%. Higher export contributions and excellent operating leverage played a key role in boosting these operational margins, proving their execution capability is top-notch. Moving to the pre-tax metrics, profit before tax hit a remarkable 502.2 crore rupees. That is a massive 45.4% surge year-on-year, alongside a 20% increase quarter-on-quarter. The core profitability of their execution strategy shines through perfectly right here. Net profit ultimately surged to 374.6 crore rupees. This is an absolute bottom-line explosion of 52.2% compared to the same quarter last year, with a healthy PAT margin holding steady at 15.3%. The company is successfully turning its growing order book into real tangible wealth. Looking at per-share metrics, earnings per share currently stands at 10.52 rupees. This is up significantly from just 6.91 rupees a year ago. Value creation for shareholders is visibly accelerating alongside their broader operational and strategic growth. To sum up the entire picture, revenue is up by 28.8%, PAT has soared by 52.2%, and their order backlog now sits at a massive 18,433 crore rupees. This was a highly disciplined quarter, showcasing serious margin expansion, disciplined execution, and the ability to fully capitalize on strong energy sector tailwinds.
Subscribe for more videos. Disclaimer.